So guys, by now you must actually learn the hard way that you can't actually do anything in the market without fully understanding the basics, which is what understanding the basic market structure. So have you asked yourself this, that no matter the advanced stuffs you've tried to add to your trading system, you're still not profitable? So that's why I've arranged in this YouTube video 7 things you need to master for you to actually conquer and understand market structure, guys. So look at what you're going to be learning in this video. We start from what basic markets behavior, and we'll go to advanced and the 2 types of market movement, and also those 7 things I've talked about for you to actually map out. I want to thank new and returning subscribers of this channel. For new viewers, my name is Victor Snow and this is Trading from This. So this is a place I take complex trading concepts and I break them down into simpler parts a beginner can understand. So if you haven't already, I would want you to please give this video a like and smash that subscribe button. Moreover, the YouTube is even saying that 90% of you guys actually feeling me here are not subscribing. And I get that because of, you think that it is not a big deal to subscribe. So it actually encourages us that put out this educational video to continue putting it out. So subscribe to this channel is something that will be a thumbs up to this channel. Please do that. Have you done it? And don't forget to turn on your post notification, guys. So let's continue. The market starts off as what? A single candle, guys. And this is what the price action of what a particular day. That's people buying, selling, everything represents this candle, which we have the high and the low. So the next set of people has the option to what either what break this high or what break this low, or what unable to break the high and unable to break the low. When it breaks the high, we call it what? A trending move. Are you understanding? And when it breaks the low, we call it what? A reversal move. And when it's unable to do the both, we call it what? A consolidating move, guys, which represent this one is going to the upside and this one is coming to the downside, and this one the market is stagnant. Guys, this trending move, guys, can actually be what? A bullish trending move, or in case of a downtrend, what which has what? A low and a high, a bearish trending move. So we said that the 2 types of market movement is what? A consolidating move when market is unable to break the high and the low, and a trending move when it breaks the high, which is what we have the bullish what? Trending move and the bearish trending move. And this bullish and bearish trending move is gonna be the first thing out of the 7 things we're gonna be talking about for us to actually master market structure. So we said that bullish and bearish move is when we have what? A continuous engulfing of previous candles to the upside for a bullish trending move and to the downside for a bearish trending move. So guys, this is what? A bullish trending move, and these are what? Previous candles. Now a continuous engulfing, this is our engulfing of previous candle engulf, previous candle engulf. And we say that what? This engulfing is when we have a mini break of market structure, where markets takes out the high of the previous day. So we call this what? A bullish trending move, and market is actually going to the upside. The opposite is a bearish, when market is coming to the downside. So guys, what are we going to be doing the next day now, since all this represents a day of price action now? Let's see now. When we are unable to break these highs now, continue this engulfing to the upside, we have what a liquidity range in the market, which are called what? A correction and a pullback, which is when there is a fight between buyers and sellers in the market. So guys, let's take a look at what it means. A correction or a pullback is the second thing we have to master. We say that it is what? A liquidity range formed as a result of market unable to continuously engulf previous candles. Can we see that market is unable to what? Engulf previous candles? That's why we have this liquidity range here. And it's as a result of either what? Traders taking their profits or here is what a supply zone people want to sell from. So guys, the duration of this correction or a pullback can either be what a short correction or a long correction. And the difference between that, what can you see this thing now? And this one is long, and we name the length of the correction now, or what the beginning of the correction as a high, and the end of the correction as a low. And for what the long one, the same thing, high and a low. So guys, I'm actually talking about this because of people that thinks that here, this particular thing you're seeing here is actually not a market structure. When we proceed in this video and we talk about major break of market structure, they don't count this. So this long correction pullback is not actually like this in real markets now. Market can, in real market scenarios, you have something like this now. Something like this. Not all red candles, you can have blue candles in it. You can even, market can come up here as far as unable to break this high now and still come down, and we can see that the market is still in its correction phase. Guys, coming up is what our major break of market structure. And if you haven't already, I would want you to please give this video a quick like. It helps us with the YouTube's algorithm. Have you done that? Good. Let's continue. So guys, the third thing we need to master is what the major break of market structure. We see that is when market breaks the recent high after this our correction has actually ended. When this our correction has actually ended, what we come up to make a major break of market structure. And we say a major break of market structure is when market actually breaks this high for us now, showing that we have to continue up to the upside. We name this up move as what? An expansion in the markets, which is the fourth thing we need to actually master. And we say that what this expansion right here now don't actually what move real markets, this thing scenario don't actually move in a straight line like this. It can actually go up, come down small before what breaking this major break of market structure. As far as it doesn't come down lower, we call it what an expansion. And we say what an expansion is a move created after market is done correcting and makes a new major break of market structure. After market is done with its correction cycle, it came and made a major break of market structure, and we call it what an expansion. And guys, we measure this expansion from what the beginning of the expansion from here and the highest of the expansion here. So the beginning of the expansion, we name it what a higher low, and what the end of the expansion, we name it what a higher high. For the bearish scenario, it will be what a lower low and a lower high. This is a higher low and this is a higher high, which are what the fifth and the sixth thing we're going to be learning for us to master basic market structure. We see that what a higher low is the lowest the duration of the correction got to before it started its expansion cycle, and what the higher high is the highest the expansion got to after making a new major break of market structure. A higher low, the lowest the market got to before what the expansion occurred now. And we know that this is a higher low because of once market started after market is done with its correction phase, started expanding, means that our next candle here now could have been a down candle, and we don't actually say that here is what our higher low. The market what makes a new break of market structure, and we can name it what is an expansion. And we see what our higher high is the highest this our expansion got to after market broke this made a new major break of market structure. And we know that here is the highest it got to because of market is reversing to the downside. You can see a couple of red candles in the market. Guys, here is our correction phase again happening again. What I anticipate in the market is market to what either here could be a short correction or a long correction, and after it is done correcting, it makes an expansion and makes a new break of market structure, and we continue the uptrend movements. Guys, for another thing of course now, you have to be able to anticipate in the market the ability of the market to actually come down to this last higher low and clear this higher low, which is the 17 we're going to be talking about for us to fully conquer market structure, is what? A reversal move. Can you see that what? We are having what? We can call this in a short correction. From a short correction move to a long correction. And can we see what? Instead of market to continue this up movement, it makes this higher low, took out this higher low. And we call this move from here to here what? A reversal move. The reversal move happens when a correction ends up breaking the most recent higher low for a bullish reversal move, and the most recent lower low for a bearish reversal move. When this happens now, you don't want to start still buying in the market. You want to move from remember we were buying, you start looking for sales in the market. So guys, if you're getting value from this one, like to this video would really help this channel immensely. Have you done it? Good. Let's continue. So guys, an example of this is Eurusd-Gbpusd right here in the market now, and this is a daily time frame. This could be the weekly time frame, the 4 hour, or any of your time frame, and we can see these guys represent each day of price action, and we see this is market continuously engulfing our markets. So what you have to do is you ask yourself, anticipate. As a trader, the ability, I think as a musician, what musicians do is once they finish learning things about playing the instrument, they tend to learn how to improvise. As traders, once you've done learning these things now, one of the skills you have to add to your trading is able to anticipate the market movement. Now you list out 1 to 3 things that the market could likely do, and the market will if you end up checking it, market will do one of those things. Now next thing we have we are expecting our next candle in the market. So we anticipate either markets continue this continuous engulfing, number 1, number 2 unable to do this engulfing, which is a correction, and the correction could be a short correction or a long correction. Number 3 the long correction could actually come back and take out this low. And number 5 markets, the long correction could make a major break of market structure. Number 6, and we have an expansion to the upside, giving us a higher low and a higher high, which is number 7. Can you see how those 7 things we learned about how they are happening in your front in the market? Let's see what happens. Can you see we are actually having a correction phase, which will name the first the start of the correction a high and the low of the correction a low. Let's see what the market want to do for us. Can you see we actually from that low now we actually did a major break of market structure, and we can call this move an expansion, and we measure the expansion from the beginning of the expansion a higher low and the end of the expansion a higher high, which is we know this is a higher light because of the market is correcting down to the downside. Are you understanding what I'm trying to explain? So the next thing is for you to anticipate. You follow the same process. Number 1, either we continue to the upside, continuous engulfing. Number 2, a correction, which could be a short or a long correction. Number 3, the long correction could take out this low and we have a reversal. Number 4, the long correction could make a major break of market structure. And number 6, we call it an expansion, which gives us a higher low and a higher high. Let's see what happens, guys. And you see we are currently having a correction in the market, right? I will name this the high of the correction and the low of the correction. And we can see the next thing is a major break of market structure, an expansion move. Name it a higher low and a higher high. We repeat the same process. A correction, this one is actually a short correction, and a major break of market structure, and we name it what expansion, and we measure the expansion from what the low, calling it a higher low, and to the high was a higher high. And guys, the next step is what you anticipate. Once market have gotten to this higher high, you anticipate again. So what am I going to anticipate? What? A correction, a short correction or a long correction. Remember, we don't tell the market things to do, we anticipate, and the market does whatever it want to do, and we follow the market. So what? A short correction, what? Or a long correction, or market take out this low, and we call it what? A reversal, and what? Or a major break on market structure, an expansion, and will continue to the upside. So can you understand that we are always looking to what? Buy at the end of the correction to make the expansion upside. So if you are able to time the market very, very well, you enter at the end of each correction to an expansion to the upside. Let's see what the market have to do for us in this trading example. Can you see that the market moved having a short correction to what? A long correction, and what finally came to the higher low, reaction and finally broke this higher low. Can we see now we are what? Having what? A reversal in the market. This is a switch from the uptrend down to a downtrend, and we call this move what? A reversal move, guys. And we measure this move with what? A low and what? A high. Next thing, what? You anticipate again. Whenever market gets to a high high or a lower high, you anticipate again. What we are anticipating what is what? A correction, a short or a long again, or could come back to take out these lows, or makes a major break of market structure to continue to the downside for us to sell. And we are looking to what? Sell from what? The low of this correction to make an expansion down. Let's see what happens. Can you see now we are having what? A correction right here for us. And guys, from this correction now we did what? A major break of market structure, which we call what? An expansion, and we name the expansion what? A lower low and a lower high. And if you're looking to find, remember I talked about we look to get a trading setups at the end of the low of the correction to trade to the expansion, and I made a YouTube video just about that. Do wait to check it out right here. So guys, you finally come to the end of this particular YouTube video. If you got value from this one, I'd want you to go ahead and hit that like button, smash that subscribe button if you want to see more about trading. This channel is all about trading, everything about trading to improve your trading career. Have you done that? Good. That'll be all, guys, and I will see you guys in my next YouTube video, guys.